Hello, everybody. This is Max Farrell from Dex Fx Markets. We're going to break into a recording of the webinar where I discuss with Thor and the other master traders on board and a lot of other traders all about the 3 strategies of the TNT. This week's a NFP week, so we're kind of just filling in some time, and I'm explaining to one of our new clients what the TNT strategies are and the 3 that they're there. Sit back and enjoy. Look forward to seeing you inside. We're going to look at what are the 3 strategies for TNT. There's TNT, there's over, under, and then there's what? Breakout. And breakout's a newer process, and it takes a little bit more experience. This is for you right out of the box, right? This is where you should start stage 1. Once you get a little better, you can start looking at over, under strategies. There's some features that you got to stay with. And then, once you really get it, and you can start seeing it, you start getting the chart vision, if you will. This is where you can gravitate as well. But this is where you start. And then these become fillers in for later on. So let's go have a look at what the TNT chart looks like directly. So we're going to do a new share, pull the screen up, go to TNT. Now, what we're looking for, and I'm going to cherry pick right now because I want to show you what it looks like, especially in the market that we're in right now. It's a little crazy. As I'm going through, I see a lot of good breakout stuff that's happening here, but 1 second. Probably better off hitting the 2 hours to have a look. Here we go. That's a pretty devastating one. That's pretty good. Because remember, the TNT doesn't have to be, we just have to decipher whether or not it's going to be a downward trend from that point. That's all we're basically looking for, is the downward trend. Okay. So we're going to start here, and I'm going to show you what the setup looks like. So this way you have it in your head. Now, once we find what the trend is, when do we find when the trend is that when the higher sides start getting lower, so higher or lower highs, right? And then lower lows. So down arrow, down arrow. We don't really know that this is, because it's still kind of looking like an uptrend here. It doesn't really commit to being a downward trend until right about here or even here. Once this goes to pullback, right? So we have arrows that go with the trend. You see how the MA is pointing. We have arrows that go with the trend, and that's a trend arrow. And then we have a up arrow here, which is going against the trend. We call this negation. So we first depict trend, and then we find negation. So there's the negation arrow. The very next arrow afterwards is what? The trade arrow. And this is the golden boy. But a few things have had to happen prior to this happening. We have to make sure that negation never breaks the trend, right? So if this arrow came out and the price jumped all the way up here and closed up here, this would have broke the trend. Does that make sense? So the idea here is that we find our trend marker. We're looking for negation, which is here, and we trade this first arrow. Now, once we do, the next part of the actual trade itself is really reliant on one thing: structure. And what is structure? We're talking price action. We're talking price structure, right? Where did structure go to? Now, what are some of the structures that are here? We're looking at support and resistance, moving average, and price structure. Sometimes price structure doesn't fit nicely on a support or resistance line, even though that they really look super nice, don't they? Don't you just love this? I'm sorry. Every time I look at these charts, I get amazed. I could sit and stare at these charts all day. So the idea for trading this one is that where would we put structure? Well, this also depends on the trade we're in. If we're in Forex, we're going to take structure to its furthest within reason, right? So if we're on a 15-minute chart, we only want to stay about maybe 20 to 30 pips at any one time, okay? So we want to come back to close structure, but don't sit on structure. So I'm not going to put a stop loss right on that line. Why? Because they're going to get hunted, right? So what I want to do is find out where is structure here. from this past negation, this could be structure, and then this could be. So depending on how many pips there are from the time you get in, you know, if your target range is say 15 pips or 20 pips, like this one is, this one's only about 5, 10, about 8 pips from there. But if I see structure here, then I know that I have a potential of really pushing for this market. So I'll set my stop loss outside of the highest structure that I can on the highest peak, and maybe even something that is passed over the MA. Okay, so from here to here, this is my risk. So if this is 20 pips, in fact, let's see what it is. 71.53, 71.69. So that's about 16 pips. I know now I want to keep an R1 to 1 that I want to go 16 pips down to make my money. So 53, 16, so 36, 37. Quite doesn't hit it there. But where do you put your take profit when you're putting it in and you're validating whether or not stop loss will be hit? You use structure, and you sort of use take profit at structure as well. And this line was here at the time. Okay, if it was a light green, it would mean that it wasn't in. Once it's on, it means that it's been hit more times than here. And so that's the beauty part about the support and resistance line, is that you can come back from structure and put your take profit on, and then recalculate if you want to keep them about R1 to 1. But for the most part, taking profit at this point, you know, that's completely up to you. In the Forex world, you can take, you know, if you put two micro lots on, once you get to about 50% of your profit on the one side, you can move everything up to break even. There's all these mentalities that you can do, but we won't go into those just yet. Sorry, where was I? Oop. Let me see if I can find that one again. Where'd you? There we go. Okay, so if we were trading with binaries, what would we do? Well, we would come back to structure within the statement price that was on Nadex, and we'd find a good statement that's in between good structure and, of course, a good structure and the price that we want to be able to get on. There's a couple of variables: the statement price on Nadex and the pricing for the market that we want to be on. So if we look at 71 or 71.60 as, you know, the binary, you know, the statement that it has to be below 71.60 by what time? You know, these are 2-hour trades, so it would be 8 bars. 1, 2, 3, 4, 5, 6, 7, 8. Made it easily. Okay. Made it super easy. If we were using it as a spread, we want to stay sort of, you know, we want to find a ceiling really tight to our closest structure, right? Because we don't care so much that it doesn't, even if it expands past that, as long as it's down below it later on a spread, that's the mentality. So you see, TNT has 3 ways you can trade it, whether it's Forex or binary or spreads. Look how much versatility you have sitting in front of you. And this is just one strategy. This is just one tool of using the arrows. Now, the next set of arrows and systems is pretty powerful because it's called the over-under strategy. And what we look for is a particular type of structure that happens. We want the trends to be pulled away from the MA. And then an arrow has to appear above, or if it's a downtrend, it has to appear above, or if it's an uptrend, it has to appear below that market. But it has to stay completely away. And I'll show you one here. We don't have to travel too far. Look at this trend. Boom, 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 boom. All the way away, all the way away. 1, 2, 3, 4, 5. Look at that. Perfect over-under strategy. Okay, so if it's an uptrend, the arrow has to be below it. Boom, boom, boom. Where do we set the stop loss for Forex at structure? or even at, I wouldn't for Forex put it at immersion, where that bar hits, but I would put it up at structure because we don't want to lose it, right? We don't want to get stopped out. Now, if we're trading on Nadex for an over under, we want to put like, if it's for a spread, we want to get as close as to the bar that is pushed past, the very first bar that's pushed past. We want to be at that open, wherever that bar is at, maybe a little bit above. So 71.71. And then because it's a 2-hour hit, we're looking at 8 bars. 1, 2, 3, 4, 5, 6, 7, 8. And again, hit it with no problem. This was a binary win. Whether it was a spread win, it would have been pretty close to be a spread. Okay. You kept it on as a 4X. You wouldn't have kept it on just for 2 hours. You would have kept it on until you made your profit, which would have been 71.66 to 71.79. So about 20 pips, 17, 18 pips, easily won. You would have got it down in here. Does that make sense? Any questions on the over-under strategy?
One comment on the binary.
Sure.
On that trade, you probably would have not lost anything, or maybe a few dollars.
On spreads?
Yeah, on the spread. If you entered it there, you can see 8 bars over to the right. It's almost exact same price.
Yeah.
And no matter what games the market makers play with it in between, the settlement price is the settlement price.
Yeah.
So you would have come out with, you would have entertained yourself for 2 hours for no money. It would have cost you nothing.
Right. It wouldn't have cost you anything, but it would have cost you time. Right. I mean, and if we look at the structure of, once we depict, here's an arrow with, there's negation, first arrow after, win. Push, 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 negation, arrow, pull back to structure. And if there's a binary, there's a win. If this was a 4X trade, structure would have been all the way down here, 71.28, 71.54. There's about 20 something pips, 28, 25 pips into that. Because we're on a 15, remember, 25 to 30 pips. This would definitely been a win overall. You would have had to wait a lot longer, right? If you can't find trades like this that happen, that's like this setup, this beautiful, and you're waiting for over-unders and other things to happen, they happen. They really do. I mean, but the rules are for the over-unders that it can't be touching the MA at all. It has to be in a clean sweep. Even though that this comes down and goes, oh, look, that could be an over-under. No, it can't, because we've broken the rules here. So you have to stay with the flow. The next is that with a breakout strategy, it has a potential to make a lot of money, but lose little. You get what I'm saying? So when you're wrong, but it's only for a little. When you're right big. And here's what I mean. If we look at this one right here, and this is where it channels out, right? This trade here channels out right here. That's the top of the channel, so we would probably go to this structure, and this is the bottom of the channel right here, okay? So what is that? That's 71.40 to 71.84. That's about 45 pips in that move, right? You could have got tricked out right here, okay? You could have got tricked out by that process. Now, you wouldn't put a 45 pip stop loss on. What you do is that you come down just below immersion status here, right? On a breakout. And you only come down to, previous, if you've extended your, if this is your, what's it called? If this is your support and resistance area, and this is your structure, you come into structure just a little bit, right? You're looking for a common process. See the tops of these ones and the bottoms of these. So you're trying to stay right around there. So 71.78, you would have got in at 71.85. See, so you would only been out 7 pips from that point, right? So as soon as that happens, as soon as that pushes into that, you would have gotten into that trade, but you would have lost 7 pips. But the channel shifts. I wouldn't call this a stop hunt. I mean, it could have been, it may have been, but this is just, this is a 15-minute chart, and all of our data comes from a handful of banks that has this process happen. It happens all the time. I never know, if they have to stop, there's got to be a lot of structure happening at that movement. I really can't see too much structure happening there. So this could have been a stop on, yes. But that's the beauty part about this, is that you can completely recover, because once this zone has been set, there's like this little bar here, but once this comes down and bounces here, now this zone has been set. So then this becomes an extension. We're ready for another trade. The rule is that it has to be in a channel, up and down, up and down. You can see the consistency. It doesn't take much to see this. The MA has to be vibrating between 2 points, with one of those channels. Once it does push out, this becomes a zone. The moment it pierces that and starts to go past this one here, this is where I get in, 71.35. Now, once that happens, where do I set my stop loss? Just back to structure, just a little bit into structure. 71.44, 71.35, about 8 pips. And look how it goes. Up, 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 up. Now, I could have gotten out a dozen different ways all the way down, made 1 to 4, whatever. You see? So breakouts are good because it gives you an opportunity to, like, hey, if this isn't a real breakout, I'm protected. This is not about win-loss ratio at this point. This is just about, if I'm right, boy, am I right. When I'm wrong, little twinge. When I'm right, boom. When I'm wrong, You got what I'm saying? And that's what this breakout structure is about. All right. I hope you guys enjoyed that. I enjoyed talking about the TNT and looking at these charts. Thank you very much to tradingview.com. Thanks a lot to all of you. Does anybody have any questions at this time? We're going to wrap it up here. Do you guys find yourself learning? Yeah, go ahead.
Questions from me, Max.
No questions from you. I have a question for you. Do you learn stuff from these webinars? Do you feel like you get something from these, or is it just some old guy blabbering on about trading?
No, I definitely get value. The problem with me is I have all the negative aspects of trading. So when you went over that the numbers and time, that was really helpful.
Right.
Because the technical stuff I can pick up eventually. For me it's more mental,
right,
than anything.
And that's what I wanted to focus on. Thank you, Earl. Earl says, yes, I do get as well. I hope all of you get something from it. Some of you will get some on one day and maybe not on others because you already know and you're like, oh, Max, come on, that's Captain Obvious. But the concept is still the same. It's how much time are you willing to put in to be here? If you're here right now and you listen to me an hour for 3 days a week, for an hour each day, that's 3 hours of your time.
I could be trading instead.
You could be trading instead.
I am trading.
Yeah, you could still be trading, right? Or it's like, I only keep one ear open. But see, that's what it's about, is that you have to invest in yourself and your education and your time. I could be trading as well.
Max,
go ahead.
If you really think about it, 3 hours, it's like a college course, right?
Yeah.
So you're getting yourself a college education for the most part for free, really. Yeah. If you look at it and you value your time that way.
Yeah. Well, look at it this way too. You pay $147. Let's just say you're the average. You're paying $147. You get all of these tools. You get access to me, access to Thor, access to Paul for an hour, for 3 days a week, for 3 hours a week. That's 12 hours a month. We're not college professors, but we're professors in our own right because of what we have done, what we studied. Paul is a master scalper and daily advocate. Thor really is a master at spreads and getting that and hunting out that floor ceiling process. And I have everything else covered in between.